actually said, okay, there's $30 trillion of assets that right now are prohibited from investing in Bitcoin, right? The firms have said, the RIA firms said, nope, can't own it. When there's a BlackRock ETF, they're going to have to let people own it. They're going to have to let their customers buy it. So let's say it's a 0.1% allocation. That's $30 billion. Well, but Mark, 30 billion on 500 billion isn't that much. Well, but 500 billion doesn't trade. There's about 100 billion that really trades, and it's even smaller than that on a daily basis. 30 billion will move the price. We saw that on Monday. But what if it's 1% allocation, which would be a prudent allocation, which people have. There are a lot of people that have 1%, 2%, 3%. Some have lots more, but a prudent allocation would be a 1% position, like a gold at 2 or 3 or 4%. So that's 300 billion. 300 billion on a $500 billion asset. And that ain't priced in. That is, I'm on the record, that is not priced in.
The Bitcoin ETF is not priced in. At this point, everyone knows that the Bitcoin ETF is inevitably coming. According to ETF analyst Eric Balchunas, the approval odds stand at 90% by January 10th, 2024, which must mean the ETF is priced in, right? Absolutely not. At least according to hedge fund CEO and founder Mark Yusko. Here's his logic. Firstly, there's $30 trillion of assets that are prohibited from investing in Bitcoin. This is due to risk, regulatory, and custodial issues. Secondly, once a BlackRock ETF is approved, all of these risk, regulatory, and custodial issues are resolved. It opens the floodgates for the $30 trillion of capital. Yusko estimates that of the $30 trillion, a 1% allocation would be prudent. A 1% allocation of $30 trillion in assets, that's $300 billion. $300 billion of capital coming for a $500 billion asset, that's not priced in. Make sure to stick around to the end of the video where Yusko breaks down the macro catalysts that are also feeding Bitcoin. Also guys, if you want to stay most up to date on the crypto world, I send out a daily 5-minute crypto newsletter that covers expert predictions, on-chain data breakdowns, and breaking news, all for free. Click the first link in the description, enter your email, and join over 15,000 others to become a better crypto investor right now. Now here's Mark Yusko on why the Bitcoin ETF is not priced in.
But the reality is, the reaction to that news is totally legit. I mean, in the sense of, yeah, when this is approved, there's going to be increased demand. And it's not if, it's when. So when this is approved, there's going to be increased demand, a lot of increased demand, and prices are going to rise. And yet here we are on Friday, recording this on Friday, and prices back up a little higher than where it was. So people have been saying, you know what, it's coming. And I think that's really interesting.
Yeah. This is a perennial question within crypto. Is this priced in or is it not priced in? And one thing that I think people consistently get wrong in this space is in TradFi, when you ask, is it priced in? The answer is almost always yes. It's almost always priced in. In crypto, it is almost always no as a heuristic. People argue about this. Just prediction, a couple months from now, people are going to start arguing about whether or not the halving is priced in, and it won't be.
It won't be. No, it's a great observation, and it goes to maturity of markets, right?
Right.
In the 20s, in the 1920s, in the roaring 20s, stuff was not priced into equities. There was lots of manipulation. There was lots of scams. There was lots of big movements on little things, and then that changed a little bit, and then by the 70s and 80s, there were still things that weren't priced in the sense that you had message boards. I love message boards, and the whole famous thing of Michael Saylor's MicroStrategy was totally manipulated. Right? From $3 to $330 back to $3, all by these message boards. I mean, he got fined, people got fined. I think some kid might have gone to jail. I can't remember. But I mean, so markets mature and media coverage matures, and the quality of analysis. Now that, and again, it's not poke at anybody in particular, but the quality of analysis in our space, in fact, if I claim to be part of the digital asset space or the crypto space, it's still working itself to a level of high quality. There are some great organizations, there's some great research organizations, but by and large, stuff gets thrown out there. Like Larry Fink, right, the president of BlackRock, went on CNBC. I guess some people don't call CNBC real TV, but I think it's real TV. And in the afternoon on Monday, and basically said, rumor, not fact. We haven't been approved. We're still making. In fact, 2 days later, it was reported that they had made the comments back to the SEC, because October 17th, Tuesday, was the day on which either it had to be approved or they had to say, hey, you have to give us more, and there's another 90 days. So that clearly happened. But Larry came on TV and said, amongst other things, well, really, things are pretty tough out there and people are afraid. And so there's a flight to quality in treasuries, gold, and crypto, which Bitcoin crypto, people get mad but Bitcoin is a cryptocurrency. I mean, it just is. But and there's he means Bitcoin, not crypto. Whatever. Yes, his application is for Bitcoin. Maybe he's not allowed to say the word Bitcoin because he's in the app. I don't know. I don't think he really doesn't understand. He's a pretty smart guy. But it is demand for other cryptocurrencies as well. But bottom line is, Bitcoin is the safe haven. Other things are you can argue whether other things are good, bad, or indifferent, but Bitcoin is digital gold. I had this amazing experience 2 nights ago where I went down to Charlotte, and it was me, Guy Swan, a banker from Fifth Third, and my new cat loves Bitcoin too. My new cat loves Bitcoin, but and a Fed governor. So we had a governor from the Richmond Fed who agreed to debate us on the future of money. I mean, bravo to him. I was like, wow, that is very cool. And we had a great discussion of the future of money. And the reality is that, we all kind of we probably already reached a conclusion, but I think that the body of work, especially from Guy Swan, who is really good. I mean, he's really good on the history and why sound money is so vital. That's Bitcoin. Bitcoin is better money. It just is. So that is to the point of real interest rates likely peaking. And we've seen lots of evidence of that, right? Stocks are actually down since August. And the only thing that's a little fly in that ointment, it started last week. We said that bonds had a nice rally, and then they gave most of that back this week because people got freaked out again by some of the economic numbers, which continue to come in hot.
I know.
I mean, hot. Like the GDP now for the Atlanta Fed, GDP now for Q3 is 5%. There's this conundrum, right, where things look pretty good from an economic perspective. If you look at the economic data, we had 2% growth. Now they're saying we're going to have 5% growth. Now the retail sales thing, part of that was just oil prices went back up and gas prices went back up, and a big chunk is gasoline. Okay, fine. That's not going to play well for the next election, by the way. If oil prices are over 100 and gasoline prices get back to $4 at the pump. So expect. So what has happened is we are returning through technology, I believe, to our genetic roots, right? We were nomadic people. We didn't stay in one place. People moved around and they went where the harvest was good or where the weather was good or where there were other people to collaborate with. And technology has enabled that, right? You don't have to pick up and move to San Francisco to work for a company if you have talent. They'll let you work from North Carolina or New Jersey or wherever. And so because of this enabling factor of technology, this idea that home ownership should be your primary asset has faded. So what I think we should really show is the combination of home ownership and equity and or crypto ownership. Because my belief is that the average millennial actually has a much bigger investing account than I ever did when I was young, because I bought a home when I was 33 and I didn't have any money left to do anything else. And so those are the assets of accumulation. And particularly if you have something like Bitcoin, which is deflationary, which is, it resists the devaluation of the currency. Larry Fink even told you to buy some because of that. I think it's an interesting dynamic. And so the positive for me is after World War II, you came back and they had the things like the GI Bill, go get a degree. And there was this, they changed the mortgage interest deduction and they told all of us boomers, buy homes and create wealth that way. And then over time, they said, no, in 1986, Tax Act of 86, no, you need to own stocks. So you're going to have these 401ks. And so they created that type of savings for the type of life that we had, right? You moved to, so everyone came back to California right after the war. And I ain't going back to Minnesota. I ain't going back to New York. I'm going to live here. So California became this incredibly populous place because it's a pretty nice lifestyle. And so I just think we're in a different time, and therefore there's a different mix of assets. What I think is really cool, and this is where I get really excited, really super sunny Saturday, is what we're doing with this increase in technology, right? Blockchain technology, the internet of blockchains, the truth net. We're liberating $7 trillion of rent to the banks, the brokers, the insurance companies, the auditors, the accountants, all the stuff that was built up around the trust industry that enabled this lifestyle of non-migrationary, sedentary, not sedentary like sitting, but you bought a house, you stayed there, you worked for one company and you got your gold watch and you sat on the front porch in retirement. Nope, that's not the future. Now, talent wins, global talent wins. And there's a collaboration because of technology. And then if we unleash that 7 trillion and we fix money with Bitcoin and we have a place where our assets don't get destroyed by central bank largesse, Kitty wants on. Holy moly. I think the power of unleashing that human potential, unbelievable.
So there's Mark Yusko on why the Bitcoin ETF isn't priced in. It's a game changer and the potential capital influx could shift the landscape for Bitcoin dramatically. If Yusko's perspective and the macro catalysts discussed have made you rethink your crypto strategy, make sure to take action wisely. Don't forget to sign up for my daily 5-minute crypto newsletter. It's packed with invaluable insights and up-to-the-minute updates from the world of cryptocurrency. Just click the link in the description below and be part of our growing community of informed crypto enthusiasts. Thanks for watching, and if you found the video insightful, please hit that like button, share it with your friends, and subscribe for more deep dives into the world of crypto. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.